Hello, and welcome from our company, Responsible Reverse Mortgages. In this film, we want to clarify what a reverse mortgage actually is. We want to talk about the different types of reverse mortgage you can get, discuss the myths surrounding reverse mortgages, and finally, explain how to use the calculator on this webpage. But first, what is a reverse mortgage? Well, as a homeowner, you have done the right thing by building up the equity in your property. This reverse mortgage is a way for you to actually access the funds built in your home, drawing out tax-free cash without having to move. The type that we deal with are also federally insured. The official term for them is home equity conversion mortgage. So now, how much equity could you actually release? Well, that depends on 4 factors: the age of the youngest homeowner, the appraised value of your home, the options that you choose, e.g. fixed or variable, and we'll discuss those in more detail later. And finally, the interest rate at the time you take out your reverse mortgage. But so, how is this different to a regular mortgage? Well, the key difference between a regular mortgage and a reverse mortgage is that you are not required to make any monthly mortgage payments. As with a regular mortgage, you remain to be the full and legal owners of your property. The only difference is you can't default because there are no payments to make. All you have to do is keep up with your insurances and your taxes like you would do with any other mortgage. Here is an example to show you how we work out the amount of equity you are entitled to. Let's create a couple, say the Joneses. There they are. Okay, and let's give them a home. To work out how much equity they can access, we consider the 4 factors that I mentioned earlier. The Joneses live in a house that is worth $250,000, and they are aged 65. They also have $25,000 left to pay on the mortgage. At the time, the Joneses could take out as much as $135,500. The Joneses now need to decide how they'd like to receive their funds, which is their choice. They can decide between taking the whole amount in a lump sum payout. Many people choose this option to clear off credit cards, bills, and mortgages. They could choose monthly payments. This option enables them to top up their retirement income by taking a payment each month. This can be for a set period of time or for as long as they live in their home. They could choose a line of credit. Here, they will be given a set line of credit which they can access when they want or need it. Finally, they could choose a combination plan. Here, the Joneses can have a combination of the above options. Our reverse mortgage specialists will be able to talk them through the best combinations. Then how is the loan repaid? Well, you are free to repay the loan in part or in full at any time without penalty if you come into some extra money or you just don't want it anymore. Most people will let their property pay off the loan, usually after they pass away. You or your estate sells the property. Only the actual balance is cleared and the remainder is left to your heirs. Our reverse mortgages are federally insured non-recourse loans. You will never owe more than the value of your property. You can rest assured no debt will ever come from this loan that your property can't settle. Reverse mortgages have changed dramatically over the last 20 years. But some myths are still a concern to some people. So here are the top 5 myths we hear every day about reverse mortgages. Myth 1, you're at risk of repossession or losing your home. Well, as there are no monthly payments to make, there are no monthly payments to miss. As long as you pay your taxes and your insurances, you're at no risk of losing your home. Myth 2, your lender takes the title to your home. Well, as with any other mortgage, you keep the title to your home, you own it. Your title is never negotiable. Myth 3, you could leave debt to your loved ones. As part of the government-insured reverse mortgage program, you will never leave debt to your loved ones. A reverse mortgage is a non-recourse loan, which means that you will never owe more than the value of your property. Myth 4, you can't get a reverse mortgage if you have an existing mortgage. Well, yes, you can. One of the biggest reasons that people take a reverse mortgage is to clear their existing mortgage, making themselves free of monthly mortgage payments. Imagine what you could do with those monthly mortgage payments if you had the choice. And myth 5, your lender will evict you. The title to your home is still yours. You own it. You can't be evicted as long as you stay current on your taxes and your insurances. So now you know a little bit more about reverse mortgages. You're ready to fill out the calculator on this webpage. It's easy. Just enter your address, and the estimated value of your home, your name, age, email, phone number, then press calculate. This will take you to a page where you can see how much equity you can release from your property. So now you may be ready to take the next step and make use of our no obligation, face-to-face advice service. We have highly experienced local specialists who can come and sit with you and explain everything in detail over a cup of coffee and make things easy for you. No spending hours on the phone to out-of-state people who have never seen your home and don't understand your neighborhood. No wading through papers on your own and mailing out important documents. And no pressure or obligation to proceed at any time. Call us today to book your appointment with your local specialist on 1-800-792-1936.